All right, folks, welcome back. This is our midweek review on the ICT Mentorship, September 15th, 2021. Tomorrow is the calendar event. I'm suspecting maybe the better trading opportunity, or I guess the cleanest price action. I'm anticipating, kind of forecasting, if you will, and we'll see what we get in regards to that. It may just bust and do nothing, just continuously go sideways, but I'll explain tomorrow in our commentary, if we get our bigger move that's cleaner, why I've been calling Thursday and not having so much interest in the days prior to Monday, Tuesday, and Wednesday. All right, so the dollar daily chart, this will be brief because tomorrow is what we're looking for, and it really hasn't done much in response to recent price action. We're still inside the range between the bearish breaker and the buy side and balance, sell side efficiency fair value gap. So far, we had just a little bit of a decline again. Now, if you look at it from a classic candlestick formation, usually when you see things like this where it goes down, 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 and it has all these tails. See how there's a lot of wicks on the bottom of that? Usually, that is classically depicted as bullish. And I guess an example would be like right here. We had 1, 2, and then it goes higher. Several in here tried to go higher, 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 and then went lower. Well, I would not be surprised if they take this through and attack the sell side liquidity here and here and just erase all of this. Now, I'm open to being wrong, obviously. I mean, it's always the case when you're providing analysis. But to me, it just looks like, okay, let's put it this way. We rallied, we consolidated. Doesn't this look like a bull flag? Does to me. And it also is looking like it's painting this idea that to some traders that see this as accumulation. Like it's going down, can't go lower, can't go lower, can't go lower. In my mind, if we didn't have these highs taken out here and rejected, this high taken out and rejected, then yeah, I could see how that might be something to consider. But because we have had all of these buy side liquidity pulls taken, we had a break in market structure, we're consolidating, and the bearish order block is being respected here. So in my mind, I have two things against this going higher just with the bearish order block. The retail ideas have 1, 2, 3, 4, bull flag, 5. They're going to see a bullish trend, 6. So retail sees 6 things that's bullish. And I'm looking at it from an analysis standpoint that this high was taken out here. These highs were taken out here, and then it broke down, creating a breaker, and we're just having a hard time getting through that. So I guess what I'm saying is gun to my head, I would not be surprised that it goes lower and overcomes these wicks, because that would fly in the face of what everyone would expect. Whereas right now, they look at this and say, okay, it's not going lower, and it's pausing before it goes higher. And I could see how they could make that argument, because I used to view the marketplace like that. Now, it may very well do this tomorrow, and that's fine. It's not going to be the first and the last time that I've gotten something wrong, but I've already been prefacing this for months now that we are in a climate that isn't conducive for high precision. So if we know those signatures are in play right now, that being low probability, we have to pick our shots more carefully. And I'm not trying to stand in front of and say, okay, whatever happens tomorrow as a result of the retail sales number and the speech that's going to come out with the euro, I just don't think that I should or you should make a case to say, okay, I'm going to call what's going to happen tomorrow. I'm just suggesting that I wouldn't be surprised if it completely erases all these and trades lower. Does it trade below this low here and get down into here? That would be an interesting development. It certainly would bring some excitement into the marketplace because we're in small ranges right now. Look at these large ranges here. Large ranges, small ranges, larger ranges, small ranges, large ranges, small ranges, large ranges, small ranges, large ranges, small ranges, large ranges. So we're in small ranges inside of a consolidation after the market has taken and failed a run above buy-side liquidity. So with the exception of this low here, trading down below that low for sell side, it hasn't rallied, has it? So you would think if it's bullish, if it took these lows out here, why hasn't the algorithm rallied? That's my argument. That's my sticking point. Okay, so in here, it just looks like they've been holding it for consolidation the entire week. If things are true to what I anticipate, the Thursday day of the week profiles that you're learning in the mentorship may develop. And that's why I'm suggesting that Thursday. And I'll talk more about that tomorrow if we get our nice clean run, either higher or lower. It doesn't make a difference to me. But I'll talk more about that tomorrow. Hourly chart, dollar index. See, we had these relative equal highs. I mentioned that yesterday that we would most likely drive up into that, run those out. I didn't think we'd get up into here. I mentioned that when we were on the 15-minute time frame. We traded softer. Nothing in here that really has my interest on the hourly chart. You'll see it on the 15-minute time frame. Here's those relative equal highs. I said we would run up into that, and we're right in here when I was doing my analysis and screen captures. We went just above that, stayed in this range, and then retraced lower. So all of these highs in here, they had buy side above it. They worked in there, took the buy side out, took it lower down into the buy side imbalance, sell side efficiency here. And that was your discount array. So took the buy side, took it down to a discount array right in here in this buy side imbalance, sell side inefficiency. Not suggesting that you should have traded, but this is what you should have in your notes for your journaling. Now, 25 pips, of a range, if that to me is pathetic. It's a very, very small range. So we should be seeing some kind of expansion in volatility. Yeah, again, I'm not particularly interested in being right about the direction. I just want to see some excitement get into the marketplace, because if we get it, then I'll have imbalances, I'll have liquidity pools that I can select from, because right now it's just slim pickings. Now this has done a very clean run on this area in here. So let's say I'm wrong and it doesn't drop down tomorrow. They could expand it out, take a deeper run into here, and then go right into this area I said it wasn't likely to go into. Right in that little tiny little pocket there. That may be an upside objective, should I be wrong in respect to what I've been discussing here for dollar. Euro-dollar daily chart, again, just marking time, hasn't really done much at all. Hourly chart, I still like this buy-side liquidity pool there. And I mentioned that we would most likely run below this short-term low here, but not take this area here. Okay, so that little imbalance right there. I don't think it needs to go down, even though it does have a nice bullish order block. To me, it made no sense for it to go there because too much liquidity up here in my mind. 15-minute time frame. Again, here's that imbalance. I said it wasn't likely to go down there. If it did, it's probably really bullish for dollar and bearish for euro. Here's the low. I mentioned that it would probably want to go down and sweep below that, but not have that much of excitement beyond that to get down to here. Well, we traded down almost equal to it here, consolidated, relative equal lows, and boom. They take it just below that low, clean up all the liquidity in here, and then pump it up into the opposing premium array that would be what would be seen in the dollar index. How we had that buy side imbalance, sell side inefficiency on the dollar index. We're having that same thing here, just a mirror version of it with a sell side imbalance, buy side inefficiency. So we took the low out, like I said we probably would, but not be animated to the degree where it would take it down to here. We see it here, and then it runs up into the imbalance here, taking out buy side liquidity. This looks like a market maker sell model. So they might want to come back down in here and disrupt this, and then now get into this area because we have high impact news and a speech tomorrow. So that might be something to watch. So it could go down there and then become more animated, maybe attack. If these highs are in play still, we can come back up and rebalance this and attack the buy side if it's still there, assuming that it hasn't rallied up there. But right now we're in a market maker sell model, so lots of liquidity is right here. And if it's going to go below there, how far can it go? Keep your eye there now. Okay. Pound dollar. This one here is still sleeping, and nothing really worth mentioning here on the daily chart. Hourly chart, remaining portion of it here, likely to take out that low. It did, took that, completely closed in the buy side balance, sell side efficiency, and rallied back up to the bearish order block. So I mentioned when we were talking about cable yesterday, the liquidity below this low, and I mentioned the premium array as the bearish order block and breaker. We see the breaker traded here, and then the bearish order block being traded to there. This, with liquidity below it, we trade down into it and then rally back up to a short-term premium array in the form of a bearish order block. So discount array to premium array. On the 15-minute time frame, you can see the breaker that I outlined yesterday in commentary and how we went up into it here and then traded lower. We traded back to it here after finding a run there, consolidation, and runs up into that bearish breaker once more. What we do here, I don't know. I have no idea. Absolutely zero bias. I have no bullish idea, no bearish idea. So I'm going to reserve my opinion here. I know sometimes I just go out on a limb and say, okay, my gun to my head, what would I say? I would say nothing. I'm pleading the fifth. Because I don't know. Okay, at this point, I would literally be guessing with no real analysis, nothing I could draw from and say, okay, this is what I think is going to happen based on, anything I've taught in the past. I have nothing here. There's nothing in this chart. Absolutely zero. Nothing, nothing, nothing. So that means cable is a no touch unless something develops overnight. I'm not interested in this one. I am watching Euro because Euro, if you look at the news economic calendar, this is what we got for tomorrow, 8 a.m. New York session. We have the ECB president speaking, and at 8:30 we have core retail sales, and then Philly Fed manufacturing index and unemployment claims. So you can see this is what I like for the one highly motivated session Thursday. The week started with low expectations in my mind, and then marked to market on Monday and Tuesday, and then Wednesday here we have it again, where it's been just a lethargic sideways market. And you'll see that there are templates, or market profiles if you will, for the weekly template. What I think and how I teach the market will likely produce the weekly range. So I'm anticipating a volatility injection based on this calendar event here, and on Thursday having been a consolidation week thus far. So that's what I'm forecasting. If I'm wrong, then it's just going to be a consolidation day tomorrow, and that means we're going to have a very, very lackluster day. Or we can get that Friday phenomenon where it creates the big move of the week, which doesn't look like it's going to produce that, at least from this vantage point now. So that's what I got for today. It's not a lot, I know, but it's based on what I've taught you in mentorship and using the experience I have. So hopefully that's been insightful to you and helpful. Until I talk to you tomorrow, be safe.